That has basically been our plan to date, is that we can grow the brand behind Sutler Ventures. We can grow the business behind Sutler Ventures by taking, large stakes in staking projects, which are then going to reward us in the short term, so that we can pay ourselves, so that we can pay to run the server, and then also take a large chunk of that and recontribute it to the network, which should hopefully be a flag to the rest of the businesses that run like us, that whatever the project has activity, is doing well. The network is growing, the tech is being developed, and we could theoretically grow the token price, grow the longer term, more typical venture style play really well, but also in a liquid fashion versus taking equity, which is super illiquid.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey, and welcome to Layer 1. Good morning, good evening, good night. It's Layer 1 Podcast. It's going to be a great one today. We got one of the most special episodes we've ever done. We have one of the best guests that we'll ever have on the podcast, and we'll get to that in a second. Dimitri, what's going on, man? How you doing in these crazy times?
Hey, man. I'm doing all right, staying off the streets here in my bunker with my supplies and my toilet paper. Kind of, enjoying myself within my own space,
You were able to get TP?
Yeah, man. It was interesting. I felt like I was going to get mugged as I was walking out with like 8 rolls of, toilet paper. So I rushed to my car right away, and drove back home. So worked out well. Obviously I have stocked up on vodka that's necessary. But other than that, yeah, man.
Nice. Let's get to the guest of honor here. We have Mike Finch. He is the founding partner of Sutler Ventures. He is the fund manager at Pirata Capital. Obviously, you guys know Mike. We're doing kind of a different episode here today where we kind of give you an inside look into what we're doing. Hopefully, we can get to an episode where Dimitri is the guest. Maybe I'm the guest. But today, we have Mike Finch. Mike, what's going on, man?
Hey, just hanging in there. I think this will be fun. Haven't ever done this before, but fortunately I have gotten some sleep since we did the Layer 1 live on Monday. So that is good news. For those of you guys needing to laugh, go to the end of the YouTube video, like 2 minutes left, and watch me just kind of trail off into space and stare elsewhere. So it was pretty funny, but I've gotten some sleep, so that's good.
Yeah, why were you staying up? It's something like 3 hours and 30 hours or something like that. Is that what you said? You slept like 4 hours and 30?
Yeah, starting Friday night, I basically like come back to the house and we started, basically kind of self-quarantining, I guess you could call it at this point, where, the plan was to get some food and, hang out, see what happens. But after Thursday night, I had a real big fear that any of the internal structure with crypto, like the credit markets and the lending markets and things like this, were just going to absolutely be destroyed. Insurance funds, on major futures exchanges were pretty much done. So the chances as we moved into Sunday and Monday for crypto to continue downward, I thought were pretty high. So we were on the fund, on the Pirata side, pretty much fully hedged. But there's always, risk as these kind of black swan events happen. So just purely kind of couldn't sleep, and, used it as an opportunity to look at what opportunities existed in the market at that time. But I'm good to go now. I'm a little more sane. So happy.
Yeah, I remember right after it happened, you told me it was like literally the craziest moment that you ever had in crypto. So we'll definitely get to that. We'll definitely get to that. We want to hear all about your story and kind of give people an insight into what we're doing at Sutler Ventures and Pirata Capital as well. But before then, as you know, being an interviewer on Layer 1, we got to get to your background, man. Take us all the way, maybe when we met all the way back in the day, and then as you found yourself into crypto, and then ICOAlert, and so on and so forth.
Yeah, for sure. I just want to say too, it's an honor to be on this podcast. You know, I hear it's like one of the fastest growing podcasts out there. Definitely one of the best. So appreciate you guys having me on. But you know, just a little shill there, no big deal. But yeah, man. So Q and I met in high school. We've been you know good friends for a long time. We both grew up athletes, right? I was not a technical guy by any means. I did terrible in math, did terrible in science. You know, was a good student, but I wasn't somebody who would kind of naturally come across computer science, right, or cryptography or anything like that. So went to you know, that was in Virginia. Ended up going out near Pittsburgh for school, where I played 2 years of football at a small Division III school there. Ended up moving on from that, and you know, kind of having the fun college time. I was majoring in psychology at the time, and you know, freshman sophomore year, that's basically what I thought I wanted to do. You know, I wanted to be like a counselor of some kind. And as football ended, and that kind of chapter from like age 7 to, I don't know how old I was at that time, 20, right? As that chapter ended, I started kind of looking at, you know, what was life going to look like after college, and went to the typical, you know, like meetings or whatnot that they have, talking about, you know, what are the jobs in psychology, right? How do you make money, all this. And basically what I found my sophomore, junior year was that if you wanted to do anything in psychology, you basically had to go back to school for another 7 to 10 years to get your master's, and then eventually your PhD. And depending on kind of where things went from there, you know, determine what you were, you know, going to want to do. But at that time I was, you know, really kind of done with school. I definitely did not want to go back to school for a long period of time. That was, I think I would have been a sophomore or a junior. So sometime between 2010 or 2011, something like that. I think, but yeah, so I knew I didn't want to go back to school. So I was like, well, I'll continue with the psychology degree, but always been interested in business, right? Let me add a business minor. So I did that and started looking around. I did a real estate internship. I thought, you know, maybe once I got out of school, I would do real estate. And then my older brother, he's an older half brother, so he's about 11 years older than I am. I'm currently 29. He actually started a craft brewery. At the time, craft beer was absolutely exploding. From a data standpoint, to give you an idea, that, you know, a typical great year for an industry that is involved in manufacturing might be like 5 to 7%, 4 to 7%, right? Year over year growth. And at the height of the time that I worked in craft beer, at one year, it was up 18%. So you just had, as that trend continued to go, you had more and more money coming in. And he had traditionally worked in the digital ad space and some other things, and he moved right into beer. So as basically a junior in college at that point, I was thrilled because, you know, I basically had free beer at any, you know, free delicious beer at any point I wanted. I didn't really drink craft beer until that started, but, you know, really fell in love with it right away, and started working, doing as much as I could for the brewery while I was still in school. You know, I couldn't really do anything until I turned 21. So I'd wake up at like 5 a.m., 6 a.m., drive from Pittsburgh, you know, 5 hours to Philly, work all day, where, you know, basically I was a salesman, selling the craft beer, right? So you would go into beer stores, you would go into bars, you would go into any place that was selling beer, and you would basically have them taste the beer if they were interested, you know, try to sell them on it, hope they bring in, you know, some cases of it, and hope that customers buy those cases so that store reorders the beer. So that was my gig. So, you know, from 5 a.m. until...
Did you use any psychological tactics in your sales when you were there?
Yeah, I mean, sales really, as you know, is basically trying to understand what the potential customer wants or needs, and how you can kind of fill those gaps, right? Like, sales is not really as artful as people think. I think the art of sales is more in trying to get people to that point of understanding that you can provide them a solution, right? So sometimes you'd go into a store and they'd have barely any craft beer, which generally meant that barely any of their customers drank craft beer at that time. So it was much harder to pitch them on it, right? You had to kind of try to understand, like, maybe it's a little corner beer store in Pennsylvania who's been struggling because at that time, all of the grocers were now starting to be able to sell beer. You know, regulations around alcohol are much different in PA than most states. Liquor state run. Beer was at that time individually sold in select beer stores. And then grocers were coming on to sell wine and beer. So these little mom and pop shops were getting crushed. So the sale there might be, hey, this is the new wave, right? You're going to be able to expand your customer base with this brand new craft beer out of Chicago. So it would just depend, but that was the hustle, right? Like 5 a.m., drive to Philly, get back at 2 a.m. There was always somebody up. It was college, have a few beers, pass out at 4 a.m., try to make class at, 10:30 on Wednesdays and Fridays and kind of rinse and repeat. So when I graduated, went full-time with that. I started selling beer in PA because we'd launched Pittsburgh shortly after that, and then expanded and did PA, Maryland, DC, West Virginia pretty quickly a few months later. Basically my brother's goal with the brewery was to, expand very quickly and not to do the brew pub model. So that as craft beer peaks, you have essentially a little bit of beer sold in a lot of places with hopefully a really strong brand that, say, a large brewer like an Anheuser-Busch or a Miller Coors or, in this case, private equity or venture money would come in and they would, allow us to expand very quickly. We could go out and do a big raise or do a big sell of the brand and of the business and try and grow it that way. Whereas typically craft brewers start with a brew pub because the margins are a lot bigger when you can sell it directly, in your own bar versus wholesale. So, was hitting all those states and then kind of slowly or quickly worked my way up and was managing sales across the country. So at the top, was working crazy hours, traveling crazy hours. One year I put like 35,000 miles on my car, just driving, all over the East Coast, New England, Midwest, the South, managing. I think at the height we had like 25 states we were selling to with over 35 wholesale distributors, part-time, over 20 part-time employees and over 5 full-time employees, of which like myself at age 24 was managing. So it was, it was a very intense process. I was kind of thrown into deep waters very quickly. A lot learned for sure.
We had Framework Ventures on this past week, and they talked a lot about kind of growing a crypto community or working with the founders to grow the community within these different networks when they make an investment, right? Because the community kind of drives narrative and narrative drives price. And that's kind of the thesis there. So when you were at Finch Beer, what is it like growing a craft brewery community, and how can that compare to growing a crypto community? And I think you did do a blog post on this a little while back, if I'm not mistaken, but how do you make that metaphor work?
Yeah, sure. That was like basically the only real world experience I had, right? I mean, I was fresh out of college, thrown right into this small business, good times and bad. So it was the only thing I had to compare as crypto started coming along. But they're very similar because craft beer then, and even still today, kind of runs along like a cult following or a religious following. There's kind of one group that is hated, and that those are the big brewers, right? Anheuser-Busch, Miller Coors. Believe it or not, Anheuser-Busch owns more than 98% of all of the beer that is sold around the world. That's not the case in the US because of all these craft brewers. But like Asia, for example, Snow Beer sells, billions and billions of barrels of beer, or millions and millions of barrels of beer, and it's fully owned by Anheuser-Busch. So they're pretty dominant. It's really like David versus Goliath. And you, for whatever reason, had like primarily a, 25 to 45-year-old white male audience who would come together in brand new breweries or craft beer bars or craft beer bottle shops and obsess over the new beers that were coming out from the new breweries. And there was a lot of internal, hate from one brewery to others. And there are a lot of just kind of general similarities when you look at the kind of cult following that a lot of these small craft breweries have or had versus the cult following that a crypto community would have when you do something like, say, an ICO. People buy all these tokens, they make money, they lose money. But, the whole point of an ICO, as we'll talk about, is, raising money from the people who actually have something invested in the network, your future users, your future community, whatever it is. So that was the similarity I basically pulled from there.
All right. Well, that was a great history about your time at Finch Beer. How did you find yourself in crypto?
Yeah, sure. So at the time I was working for Finch's, my younger brother, so I have two brothers, an older brother, Ben, and a younger brother, Rob, who a lot of you probably know. Around 2011 or 2012, he was playing a lot of World of Warcraft. And for whatever reason in that kind of online community, Bitcoin came up, right? So the way I look at it is from the time that Bitcoin started to about 2011, 2012, the only people that heard about Bitcoin or crypto were those directly in the computer science cryptography field, right? And because a lot of those people have ties to gaming, in a lot of cases, gaming was kind of that next big, or gambling, right? Poker, a lot of poker players heard about Bitcoin back in 2011, 2012. Gaming and poker were kind of the next wave of people hearing about Bitcoin because they had a need that Bitcoin solved, right? You, as a poker player, you could get paid in Bitcoin. As a gamer, you could, trade skins with Bitcoin, right? So he told me about it in about 2011 or 2012. And in typical Big Brother fashion, I was like, whatever, like, I don't really care about your nerd money, why do I care if this thing is, traded on World of Warcraft or whatever, and forgot about it for a while. And whenever Mt. Gox happened, I kind of followed up with him and was like, hey man, what's going on? I had just graduated college, was working for the brewery full time now. And he had basically told me how he had bought all of this Bitcoin and made all of this money and then lost it on Mt. Gox. As the price had dumped. He still has the piece of paper that's like the bankruptcy note from Mt. Gox. Hopefully he hasn't like lost that or anything, because that's going to be a relic. But he lost a bunch of it on Mt. Gox. And when I had seen that the price jumped from, a few bucks to then $1,300 on Mt. Gox, I was like, oh shit, like this is actually traded in a market, right? Like there might be something to this. So I got a little more interested at that point. But it wasn't until really 2015 that 2014, 2015 that I started buying any of it. And I bought it because for whatever reason, even though I don't have a finance background, I've always really been interested in finance. I've always found the concept of traders or investors to be like something I would aspire to, or that I found really attractive for whatever reason. So I was like, hey, let me just mess around, right? Let me buy some Bitcoin, see if I can buy it, buy low, sell high. I had no idea what I was doing, had no previous trading experience, put a bunch of money into it that, I had basically had from some remaining money in like a college fund kind of thing, and traded a little bit with it, lost a shitload, made a little bit, lost a bunch more, and basically kind of forgot about it, sold it all off. As the brewery was starting to slow down, I started getting more interested in it. So late 2015, early 2016, I started really getting interested in it because the brewery job was disappearing. Basically, we could not raise enough money to kind of get us to the point where we could sell it. So early 2016, I was out of the craft beer space and really, had bought a bunch of Bitcoin at that time, was trying to trade it back and forth again, lost some more on trading. And early 2016 basically or late 2015 maybe, came to the realization that like, hey, this isn't something I should trade, but you know, there's a lot of growth happening in this space. It seems like there's this Ethereum thing now. I don't know what's going on with that. But I want to learn about that, and, you know, kind of let me just hold this, right? Like, I don't know what this is, but let me look into it. Let me just hold a bunch of it. So held some of the Bitcoin and started looking into it as the brewery job ended. And I basically just kind of took a break. So from like early 16 to Q3, Q4 of 2016, I was just, you know, holding Bitcoin, trading a little bit, trying to make some money, had some savings I could use to kind of, you know, support myself. And while I learned about crypto. So, you know, early 2016 is the stage. If you look at the charts, you can kind of see where this is going, right? So I'm learning about Ethereum. I ended up deciding to sell all of the Bitcoin I had and put it into Ethereum. Still didn't know what I wanted to do. Still didn't like really have a real job or anything like that. And put it all into Ethereum. And
when you made that decision, was it purely just out of speculation, or is it something that you read about Ethereum that was like, okay, this tech is, you know, much better? What Bitcoin's trying to do, or so? What went into that? Because it kind of, I got the idea that you're talking about the Bitcoin more of that you were looking into it because the price was pumping, so it's kind of a speculative play, right? And you know, what made you kind of choose ETH? You know, when it came out?
Yeah, it's a good question, and it's a good point, because essentially, as I was looking at it, I had discovered that this DAO hack had happened, right? So everybody in ETH is freaking out because the Ethereum DAO that they had raised all this money for had been hacked. So the price had plummeted from like 20 some bucks to around like $10. I was like, holy shit, this just dropped by like 50%. If you look at Bitcoin, right, it dropped from like 1,300 to 30. And, you know, is obviously worth a few $100 now or whatever, or $1,000, whatever it was at the time. So I was like, well, there might be an opportunity here, and was learning about it while I was kind of looking through the community, you know, looking at the community. And essentially what I saw was that while everybody was shaken, they weren't completely like gone, right? Like there were still a lot of people building on Ethereum. There was a lot of activity going on. So as the price continued to go down and people capitulated, I was able to get ETH anywhere from $5 to about $11, which I was like, hey man, you know, I'll take a chance, right? Dumped the remaining cash savings I basically had into ETH, which I do not advise at all. It was stupid and risky, especially at a time when, you know, I didn't really have like a good job, but I figured worst case, you know, I'll go and sell real estate for some schmuck or something, or sell insurance, right? Like, let me take a shot. So took that shot. And then spring of 2016, it went from like $10 to $30 or $50. And I was like, holy shit. Like I just, you know, 5X my money. I think I put like 10K or 15K into it. You know, so that was worth a lot more. And then a few weeks later or a few months later, it went all the way up to $300. So it was like, holy shit. Like, you know, this is absolutely nuts. I'm really getting into crypto now.
You didn't sell, right? Like
I didn't.
You saw all those profits. Why did you not sell?
Well, I sold
guarantee
eventually.
your girl. I guarantee Andrea was telling you to sell all the way up.
I'm sure. Yeah, I'm sure. Probably all the way up. Yeah. So I didn't sell initially, but as I was kind of learning and whatnot, I realized, okay, like, hey, now I have all of this cash, right? Like this is really great. Right. It didn't occur to me that, hey, just as this might have gone up in value, it may also go down in value again. So it didn't sell, but I was like, you know what? I need cash flow. You know, the little bit of whatever I'm trading, like, isn't really working. I might have like a crazy day and make like $1,000, but then I don't make any money for 2 weeks. So it's like, this isn't going to work. So I knew I had to get another job. So I got a job with another much larger brewery that, ironically enough, had just gotten bought by Anheuser-Busch, a brewery from Virginia called Devil's Backbone. And I was like, okay, they're going to pay me $50,000 a year. I still had so many connections in Pittsburgh from the beer scene that what ended up happening was I was able to work like 25 or 30 hours a week and sell a ton of beer, because instead of having to go and like meet people like all the other sales reps, I'd already known them. I already had their phone numbers. So I just text them, call them, right? I could get all my stuff done in 4 or 5, 6 hours a week, versus the other salespeople who had to work 8, 9, 10 hours a week, you know, a day. a day, not a week. So I was able to make money in the short term while also, looking at crypto and continuing to educate myself and understanding like what's the next opportunity. And started hearing about EOS, which was going to solve all of the problems that Ethereum had. This was, I don't know when we started hearing about it, maybe late 2016. I think Rob found a video on YouTube of Dan Larimer talking at some crypto conference. I swear to God, it had like 120 views. And it was the first time that he had announced that this was coming. Because at the time, I think he was still with BitShares or had just left maybe. So this is the first time he's talking about scalability and throughput and this whole concept of blockchain technology being something that like would evolve and grow was something I was starting to realize. And I was like, this is going to be the shit. This is going to be absolutely nuts. So we didn't know what was next, whatever, but we were following EOS closely and move forward to 2017. Rob was going through a pretty difficult time with some businesses that he had. He had spent a lot of the crypto profits that he had made on Bitcoin to kind of try some other ventures, and those didn't really work out. So he was kind of in a bad spot there, but still very interested in crypto as well. And we're paying attention to crypto, and this concept of ICOs kind of started to come out. So that was, out of college, moved into beer, learned a lot there, kind of took a break, which allowed me to learn a lot about crypto, got super lucky on ETH, started to hear about EOS, and that's kind of where that chapter of beer and anything non-crypto fully ended, I guess.
Yeah, somewhere in that time frame between 2016 and 2017, I remember you started texting me about it. Maybe it was like texting the group chat that we're all in from back home, or maybe it was just like a me and you thing that you were texting me about. You got me involved, so I'm super appreciative of that. Before we get to ICOAlert, because we're kind of like running right up to the start of ICOAlert and kind of the genesis there. Take us through kind of your first initial walkthrough of staking projects, right? Because I remember late 2016, it was Lisk, it was Rise. What did you see in these staking projects? Was it just like, oh, I can make passive income here? Or did you actually believe in what Lisk and in the possibility of what Rise were doing at the time?
Yeah, it's really hard for me to chronicle like each investment that was made because a lot of them overlapped. So like ETH was very clear because that was the first one. Mm-hmm. But then once I hit big on ETH, I was like, let's fucking go. Time to gamble, right? Let's buy some shit coins, which wasn't, I don't even think a term at the time. So Rob had found the concept of proof of stake and was telling me all about proof of stake. And it's funny because one thing that I failed to mention, but I've always found funny is that, so Rob initially told me about Bitcoin, right? And I thought it was bullshit. I thought it was nerd money, whatever, right? Like what? I have no need for this, there's no way this is going to be anything. And he bought in heavy and made a ton of money, right? Like 6 figures on Bitcoin, or at least 5 figures on Bitcoin. And then as I got into it, eventually I found Ethereum, and I was telling him all about Ethereum, and he was like, proof of stake is bullshit. It's never going to be anything. I'm sticking with Bitcoin. ETH is going to die. The DAO hackers. I was like, that's fine. Threw everything in ETH. And it was the opposite, right? I made a bunch of money on ETH, and he was like, damn, like, okay, this is for real. Proof of stake is a thing. So he really understood it from a technical level and was explaining it to me, and I was learning about it. And that's kind of how we found Lisk and Rise. Lisk is still around. I doubt Rise is of any existence anymore, but basically the thought process we were having, I believe, was, okay, ETH is proof of stake. ETH just took off. Where are the other undervalued proof of stake projects, right? Like I have always, because I don't necessarily have like a trading background or a finance background, my thesis in crypto has always been try to find the newer projects or the lesser known projects that are undervalued relative to the projects that everybody knows about that maybe are equally, correctly valued, so that you can gain exposure to that asset like Alisk or Rise growing in value, getting closer to the value of ETH, right? Didn't ever really think that Lisk or Rise was going to be worth as much as ETH or as popular as ETH, but based on ETH's growth, I thought there was like, you know, particular upside to be had in those projects. And you know, started getting into that. And as we started looking at these new projects, that's when we started to hear about ICOs, because it was like brand new projects, right? Raising money. So yeah, hopefully that answers your question.
Where did you hear, like when you started hearing about ICOs, what was like the information coming out about new ICOs at that time when you guys were looking for new projects to invest in?
There really wasn't much information at all. You know, it was a pretty core community of crypto people. There's a lot on Reddit and a lot on Bitcoin Talk. And it was, you know, this would be early 17 now, moving into like this Q2 of 17 into the spring. So I was working for that Devil's Backbone brewery at the time. And Rob was working like part-time kind of on like an hourly contract basis for a web design firm in Virginia. So he kind of went through this tough time. Then, you know, he got this job. He started making some money. I had made some money from Devil's Backbone, had the ETH money, right? So we started hearing about them because they would raise all this money and then, you know, go to be traded on some decentralized exchange or something like that, right? On ETH, and people would make 10x, 20x, 30x their money. So we could see this kind of blooming, and we could see more and more people coming into these Reddit chats and shit like this and starting to get interested in it. And, you know, this kind of moves into how ICOAlert was born. But, you know, Rob was working much less than I was. He was working maybe 10, 20 hours a week in the same fashion, because he had so much web design experience that he could do what they wanted on, you know, let's say it was like a 2-week contract he had. Well, he could get it done in like 2 or 3 nights and just procrastinate it all and get paid for that 14-day contract. So the other 10 or 11 days, you know, he was using to look into ICOs and look into crypto, right? So, you know, like people are always like, how do I get into crypto? How do I get into crypto? And I always tell them, like, like you have to have, you can't just jump into crypto, right? Like you have to have a skill, and you have to understand how whatever you're doing now can give you the opportunity to, number one, learn about crypto, and then number two, jump in some form or fashion, right? I had experience selling beer. So I went to sell beer because I knew I had an advantage there. I could make decent money while I learned about this. Rob, he had a ton of experience in web design. He knew he had an advantage there. He went and did that. So at the time, there was really pretty clearly a problem in the market of information flowing out about these ICOs. At the time, no one was incentivized to spread the word about an ICO they heard about, because there were limited seats at the table, right? So if at the time they were only raising $1 or $2 or $3 million, well, if you have enough whales who are able to get into these ICOs could be done in a matter of seconds, right? So they not only were they filling up fast, but people weren't incentivized to tell their friends or people on the internet about them, because that would be a chance that somebody would get in before them. So you would kind of hear about these ICOs after the fact, like whatever the hell coin raises $5 million, you know, roadmap, like first thing they're going to do is launch mainnet. Second thing they're going to do is list on exchanges, right? Third thing they're going to do is cash out, basically, right? Moon. That was the play. So we saw this like disparity in information, and in order to invest in them just for ourselves, Rob started putting together like an Excel sheet of these ICOs. So he would go through, he'd scan Reddit, he'd scan Bitcoin Talk. Those were the only places that people were sharing news. It was usually from project founders, and kind of like map out like, hey, this one's starting here. It's going to end at this time. This is their raise. And we would go back and forth on an Excel sheet and look through all of the projects and see if there were any there that we thought would be good to invest in. So as we started doing that, a crazy thing happened, basically. And this is probably my favorite part of the entire ICOAlert story, other than like the come up of it. as I think I was sleeping because it was late at night, as these ICOs were booming, Rob had, his different, basically like kind of anonymous connections within crypto, right? You both, maybe hold some coin and you get to know the person. You don't really know who they are, but that they basically said they have made a ton of money on Bitcoin, just like he did. And you kind of build these like weird anonymous internet friendships, right? So he had been talking to a project, learning about what this project was looking to do in their sale. They had raised, a handful of money already, a few $1 million. And the project was basically like, hey, we know you've been like poking around the ICO space a lot. We know, you want to invest in this. If you can put in $250,000 before this closes in 12 hours, we will give you a percentage of what you put in back, right? We'll basically give you a discount, right? So this was the first concept of ICO discounts coming into my brain, right? So they were like, hey, we'll give you 15% or 25%. I don't remember what the number was. But he, at the time, obviously didn't have $250,000 to put in, but knew all of these anonymous personalities or whatnot in crypto. So he reached out to them and was basically like, hey, so-and-so coin or so-and-so project has already raised $4 million. Their hard cap is 4.25, right? They need $250,000. I've already put in $1,000. I think this is super interesting. Take a look if you want to invest. Do me a favor and attach this like essentially like referral code to your transaction, right? So the project had it set up in a way where any contribution that came in from Rob, he would use his like some sort of like digital identifier to say like, hey, this came from Rob. So gave out the referral codes and was kind of watching and checking Etherscan or whatever it was at the time. And little bit was coming through, right? But part of the deal was that he was only going to get the referral if the full round closed, right? So he needed the full 250 to end. So as this was happening, hours go by, a little bit trickles in, maybe like 35K. And towards the end, with about an hour or two left, they had only raised another like 70K. So he was like, whatever, it was a good shot. Like, I'm not going to, this isn't going to happen. And with something like 8 minutes left, right, in the middle of the night, he goes in, checks on it, and, same thing, they're maybe like 120 or something, definitely not going to hit the 250. And then with minutes to spare, a full 250K investment comes in and hits that project, oversubscribes the project, and the sale ends. Checks the website, sale's done, checks referral code, Rob, right? It's one of these guys he talked to, put in the full 250K, so he knew he was going to get paid. So in a matter of seconds, he made something like $35,000. And that was his light on, as he was telling me this the next day, with what had happened. $35,000 for him at that time was so foreign. He had no concept of that much money based on, the kind of debt and whatnot he had gone through previously. So this was a big deal. This was a big deal for me, for somebody who was making $50K a year, right? To make, what is that? 70% of your annual pay in a second was huge. So I was like, listen, man, you need to run with this, right? Like, there is an opportunity here. If you can basically get money to these projects will pay you, right? Which is illegal. You're not supposed to do this without a license, but at the time it was so new, it didn't really matter. So he kept doing that, and he made a ton of money, helping these projects raise money, and eventually turned that Excel sheet of ICOs into a website. Kind of trickling in, whatever, getting some views here or there. And then all of a sudden it just absolutely exploded. It was called ICOAlert.com. And he started having an influx of emails, basically an influx of emails from users who were like, hey, have you heard of this ICO? Can you list this ICO for me? Right? Can you track it for me? As well as projects who were like, hey, you're the only site out here, right? Like, you have all the ICOs. How the hell do you have all the ICOs? here's all of our information, list us on there, right? So he very quickly realized that as his numbers were growing and getting to a point where there were now like thousands and thousands of people visiting the site, he could sell ads on the site. But because it was a very simple, I think at the first version of the site, which you guys have probably seen, it was like 2 columns, right? And it was like 2 columns of projects. Started, ended. Like, here's the projects that are starting with the dates, going down, right? So that those starting the soonest would be listed at the top. Those starting the latest would be listed at the bottom. EOS pops up there, right, at this point. A bunch of the most well-known projects are announcing Decentraland. Some of these, hey, Decentraland sale August 2017, whatever it is. Damn, this is crazy. Like, look at all these new projects popping up, all the ended ones on the right. So it's a glorified Excel sheet, right? He didn't want, in all the white space on the site, he didn't want to add, smartly enough, ads, right? Like typical ads, where you're actually not going to get paid that much on thousands of hits. You need millions of hits. And he didn't want to compromise his experience because he was using it himself and I was using it myself, as well as the people that were on there using it. So kind of the concepts of working with the projects came about where, hey, these, users need this list, right, of ICOs that are coming out. But what do the ICOs themselves need in order to raise more money? So he started coming out with some of the marketing, some of the ads that we were selling, which was like, of all the email subscribers he had who were getting daily email alerts of brand new ICOs listed on the site, he knew he could highlight one, right, and sell that. And that started taking off. The first month he sold something like 8K in ads, which again, at that time was like a shitload of money. And the next month was 28K in these ads. And then the following month, I think June maybe, he did like another 35K there. And it was just him. I wasn't helping him with it. I was still working for this brewery, still researching ICOs. And as that started to take off, I started helping him out, right? Writing these various reports on these ICOs where basically I would do an in-depth, like multi-day research analysis of what these projects are, what are they trying to do. We had been investing in ICOs and looking at them, so we had a really good understanding of what drove value in people's eyes about these ICOs, right? What did people like about the ICOs? What did they hate? So we were able to take all of that information from a project, read the whole white paper, and deliver it in like an 8 or 10 or 12 page report about the project. So I was working part-time. He was giving me, $500 a report or $1,000 a report. So I was doing these as fast as I could. And then it got to a point where there was so much research that needed done in the queue that I needed somebody like Q to basically come on, who you at the time, you were, what were you doing?
I was in college coaching at the time.
Yeah.
I was chasing my dream. We'll leave that for another episode.
That'll be for your interview for sure. Yeah. But, so I was like, hey man, listen, I know you've been following crypto for a little while. Like, you're someone who I can trust. You're a good buddy of mine. This is what we have going on. If you do these reports, I'll give you $500 a pop, which same thing. You were like, okay, time to learn about ICOs, time to figure all this out. And around that time, I decided to leave the brewery job, which was, the clean cut for me from craft beer to crypto, and really go full time working with Rob on ICOAlert. You were working part time, and that was really kind of the birth of ICOAlert. We didn't even create an entity, a legal entity, until he had already made like 6 figures. We had no idea what we had. We had no idea what was happening. All we knew was that there was this demand, there was this need in the market, and here was this solution that we had thought of that was working. So we were gonna continue with it, and that's kind of the birth of it.
Yeah, there's so many things I can talk on those early days, man. And it brings a smile to my face the whole time we were talking, as we like got to the run up of ICOAlert starting, and just like thinking about all of those times. I remember meeting Zach Gall at Everything ES at Industry Public House. By the time that I was up there full time, he was our second hire or the hire post me.
Right.
But yeah, I feel like we can spend a whole episode on ICOAlert, man. And Dimitri, I feel like that we should tell the listeners the story about your interview and what happened afterwards. I think that's a great
100%.
one. There's a ton of stuff to get to. We could do a whole episode on ICOAlert. So I'm kind of figuring out where we should kind of flow here, because I do want to talk about Sutler Ventures and Pirata. We've got about 30 minutes left. So
basically what happened was, we created a real business. We expanded, right? You came on full time. We hired Gall. He came on from August 2017, right? Yeah, August 2017 to early 2018. That's when we saw the pump, right? So we had month over month revenues growing by over 100% easy, right? 100% was basically baseline. It was hysteria. It was mania from, August 17 to really even April 18. And the business grew and grew and grew. We hired a bunch of people. We had as many as 20 people, full-time or part-time. We had, 5,500 square feet of office space. We were planning to expand. We thought that crypto was here. And more importantly, ICOs were going to be a new way that venture capital was raised. Now, as we were basically managing this business, we weren't investing in these ICOs anymore, right? Because 14-hour days of ICOA or 12-hour days or whatever it was left zero time for, hey, what's the next ICO to invest in? So we were heads down in this business, trying to make it work, trying to grow, trying to expand our offerings. We wanted a mobile app, all these different things, looking at all these different opportunities, didn't really understand what was happening in the ICO space, which was, blatant disregard for the end user or the end investor, right? So now VCs were in the space. They were getting massive discounts. ICOs were using money they had raised to pay exchanges to list them as soon as the tokens were issued, so that then those VCs who had paid them money could dump it on the retail investors who didn't get into the ICO, but were now going to buy it on the exchange. So you had demand from retail investors who were just trying to get into this hype and trying to get into this mania. And they were supporting all of the venture money that was being dumped, or the people that got into the ICO that was being dumped on them, and were now left holding this token, who in some cases, certainly not the majority of the case, but in some cases, those project founders had no desire to do anything with. Project founders knew, I'm going to raise 40 million bucks and then we'll figure it out, right? Because it doesn't matter. Once we have the money, even if the token dies, we can pay ourselves enough. We can have enough of these tokens. We can dump these tokens on the market. We'll be rich forever. So while that was far from the majority, there were terrible things like that, or terrible things like the ratings conspiracies that were happening, where all of these new ICO listing sites that were popping up, like ICO Bench and ICO Box, were rating ICOs, which theoretically sounds like a good idea. You take the people who know the most about ICOs, you have them rate them like you would have institutions rate bonds or something like that. But the problem was that those listing sites, a large majority of them were now selling these ratings, right? So they go to the projects and say, hey, we'll give you a 5-star rating, but you've got to give us 200K. So they would just basically add into the fundraising funnel, right? All right, well, instead of raising 5 million, we'll raise 5.2, right? We know we can sell it out, but we'll do that because, because we know we can, and we got to pay the listing site to get the rating, so that we get the money, so that we can pay the exchange to list us, so that then the venture guys who gave us the money can dump on the retail guys. So it became this bastardized process that we really had no understanding was happening, because it was all happening behind the scenes. And then in mid 2018, BTC continued to dump. There were clear cracks in the ICO market. People started reporting on all of this happening. We saw, well, and even before the reporting on it happened, what was happening with the ratings, what was happening with the venture money. And, it basically fizzled out as BTC continued into a bear market, and we were forced to lay a bunch of people off and basically close down the ICOalert business as it was at that time. We wanted to continue with the brand. We wanted to take what we had learned from crypto since, 20 whatever for my brother and 2015 for me, and, kind of leverage this new experience and what we thought was going to be a really growing and booming new industry. And at the time, after, basically with the ETH money that I had eventually sold, I didn't sell it at the top, but, sold it at a decent price. I took all of that and moved it into EOS on their ICO. So their ICO came around, and it was the year-long ICO. The price went crazy, right? Basically, you could invest in the ICO, but then also trade essentially derivatives of the future token, I think, because I don't think they were distributing tokens at the time. Maybe they were, but either way, you could trade EOS on the market.
They were ERC20 tokens.
Yeah, they were the ERC20 tokens, right? Which was a brand new concept coming up, where instead of the sale going on for 2 or 3 months and then you getting your tokens, projects were running the sales on Ethereum so that they could use these created ERC20 tokens that represented the future mainnet tokens 1-to-1 and trade them on the markets now, right? So that investors could get out immediately. So this was happening with EOS. It was raising so much money. It got so much attention. The price went crazy. It pumped all the way to $22. Lots of stories on that, because most of the people in the ICOAlert office were investing in EOS. We're bullish on EOS. And I was able to exit on EOS, not at the top, but, at a many multiple of the money that I had sold on Ethereum into EOS. So as ICOAlert was ending, I had made a bunch of money on my personal investments, returned however many, 6 figures worth to try to prop up ICOAlert and keep it rolling. At which point I knew, hey, it's going to be really, really hard to start a traditional business in the crypto space for the foreseeable future because of this volatility. While we obviously weren't investing as a business in crypto, we were getting paid in BTC and ETH, and the entire, structure of ICOAlert was dependent on the ICO market, was dependent on crypto. So as ICOAlert ended, I kind of was able to reflect and understand, hey, I've been really successful in just buying and selling this stuff versus building a business around it. So let me go and focus on that. And that's where the concept of Pirata Capital came out. That's where the concept of Sutler Ventures came about. So I know that was a little long-winded, but I wanted to, kind of put a bow on the ICOAlert story and make sure people understood where we stood at ICOAlert and that we were not one of those bad actors, and just understand kind of how that process of ICOs happened and eventually died.
Did you guys ever consider doing an ICO at ICOAlert? Raising funds basically through an ICO method?
Yeah, absolutely. The thing was that, fortunately for us, when we looked at doing an ICO, we had no viable reason for needing a token for what we were doing. So
no utility.
As very naive people at the time, this was at a time when we didn't understand all the bullshit that was happening behind the scenes. We said, well, this will never work. We'll never be able to raise this money because we don't need a token. There's no utility to the token. So we probably could have raised a ton of money, right? And even gone about it in a semi-regulatory way with lawyers and whatnot. But at the end of the day, it wouldn't matter because ICOs pretty much fully died anyway. So it ended up being a blessing that we were naive enough to look at it as like, well, where's the utility? It'll never sell, when everybody else was just playing this new scheme that had been developed.
I think the importance, because I remember those conversations of like, should we have a token? Should we not? I think at that time, we were just looking at the revenue we were bringing in and it didn't matter, right? Like we were just like, look at month over month growth. Like why the hell do we want to go about and like start this new token and deal with the regulation and all that stuff? But I think it could have been successful on the front end, but definitely would have had to deal with some regulation on the back end. But I do remember those conversations. So Dima and Mike, why don't we hit that story before we work into Sutler Ventures and Pirata? Tell the story of Dimitri giving his interview and maybe about to not work at ICOAlert and then work at ICOAlert.
Deem, let me give my side of the story first, and then you give yours because I think that will kind of lay the context and the groundwork. So this was it February, March?
Yeah, I started out in March, so that was probably like February was when it happened.
So in sequentially October, November, December, January, February, 5 months in a row, we either were growing at over 100% month over month growth, but all obviously breaking new records on monthly sales. The month of February, I couldn't even send out invoices fast enough for a lot of the guys. And it was chaos. We could not grow fast enough. We were looking at new office spaces. We didn't even have enough people to smile and dial and call projects to explain who we are and why we're not ICO Box or ICO Bench or all these other, assholes, right? So we needed salespeople really bad. I was very desperate to get salespeople. Now, that's not to say I was desperate to hire Dimitri, because I think we found Dimitri on LinkedIn, and this was when Russian ICOs were really blowing up. So I was like, holy shit. Not only is this guy, Ukrainian, not only does he speak Russian, but he actually has like legit Wall Street FX experience where, this is going to be massive clout that we don't have. At the time, we didn't have anybody that had traditional financial experience working at ICOAlert. So from the time that I found Dimitri on LinkedIn, I was like, this is going to be a slam dunk, right? But we were interviewing a lot of other people, and he came into the office. The interview went great. He did fantastic. It was a very laid back, very casual office. We wanted as much creativity basically as possible going on, because we knew that the listing business, the ICO listing business, was not going to survive on its own forever. We basically had a conference room that also doubled as like kind of a rest and relaxation room, where you could come in, you could listen to a podcast, play video games, whatever it was. And that's where we would host the interviews. So at the end of the interview, we played Mario Kart, I think it was, with Dima, and basically put him up, paid for his flight to get here. I told him, hey man, thanks. Interview was great. There's some great restaurants. I'll send you some information on them. Go check them out. Dinner and drinks are on us, basically. Right. I'm sure Dima's feeling good at this point, and you take it from there.
Yeah. So, after the interview, I thought everything went great. You guys flew me out. So I was like, all right, that's it. I got the job. They wouldn't fly me out if I didn't get the job. Come on. And I get there, go through the interview and everything, and then they say, hey, as a tradition, we always play this, some kind of American game on, like, what is it called? The Super Smash Brothers or something.
Yeah, on GameCube.
Yeah. So I was like, okay, yeah, I guess let's play, and I got schooled in that so hard. And then, after that, Mike comes up to me. He's like, hey, man, thanks a lot for the time. We still have other people to interview, so I'll let you know how things go. And I was like, what? What do you mean? I thought this was kind of like a done deal, like, so now I go back to the hotel, and I'm just like feeling kind of depressed and down because, I thought I had this, and obviously, I thought it was a great connection. I really was excited to work for ICOAlert because like the guys were great, like it was amazing. And then at the end I get this and I was like, wow. But Mike said he's going to cover, the ICOAlert cover, basically my dining. So naturally, to kind of, as I was nervous, I wanted to take
ease your pain.
Yeah, ease my pain. Yeah, I went to the bars that Mike suggested, and one of them was called Taco, which is fantastic tacos and tequila, and ended up like racking up a bill.
Monday rolls around or whatever, and we hire Dimitri immediately, right? And I'm like, hey, when can you start? Right, move out here. Here's info on Pittsburgh. Figure out what neighborhood you want to live in. Blah, blah, blah. Let's rock and roll. And I was like, oh, by the way, send me your, receipts for your dinner. And I look, and this guy spent like $165 on top shelf tequila. He ate like 4 tacos. I was like, are you kidding me? Like, I should have asked for this receipt before I offered. I was like, you got to be shitting me. But I was like, well, if he comes in and makes a ton of money for us, which he inevitably did, it'll pay off. But yeah, it's a fantastic story.
That is an amazing story. Every time we get together, I think we go over at least one part of that story. But so we've got probably, I would say, like 10, 15 minutes left. Let's get into Sutler Ventures. Let's get into Pirata. a little bit of layer one, but how these three kind of work together, as well as the ICOAlert. I think we wrapped a bow on that, but anyway, that kind of interacted with Sutler Ventures.
Yeah, sure. So like I said, when ICOAlert ended, I really wanted to refocus on actual investment, within crypto. I understood that, end of 2017 was the pump, right? And generally there's a bear market for crypto that lasts somewhere between like 11 and 22 months or something, right? So I figured, okay, 2, maybe 3 years max, we have this crypto bear market. If we can kind of get in carefully here around 3K, from an investment standpoint, we could probably make a good bit of money. So the first concept that came up was actually putting returns on a book, right? So if you're out there, if you've bought and sold crypto, if you've made some money, if you ever want to go out and raise money for that, it's going to be very difficult to do so unless you have previously created an entity so that those returns you've made in crypto are what you would call like on the book, right? So you need a legal entity, you need audited financials, you need top-notch accounting, you need custody, right? You need all these various things if you ever want to raise money from real investors. So that was the thought, right? Okay, well let's at least start to put some returns on the books, right? So that if in the future we ever do want to raise money, we have that box checked so that we don't have to go through it then. Plus, like I said, hopefully it should be at an opportunity where as this bear market ends, we should get some really bullish things happening for Bitcoin. So put together Pirata Capital. I had actually met my partner in that, Zach Lee, through Dimitri, who they had both worked together on Wall Street. He had, a lot of the traditional financial pieces when it comes to being a hedge fund manager that I needed, right? I didn't have the experience. I didn't know what options were. I didn't even really know, too well how an order book worked, right? Like all of this from a trading standpoint was very new to me. I knew I had an understanding of what crypto was from a technical standpoint. I knew that I could evaluate various tokens or projects or business models within crypto fundamentally very well. I'd shown that, but to actually manage money was something, in a systematic and structured way was something that I didn't have a ton of experience in. Whereas, he had managed, billions of dollars worth of clients' money, and all of those clients were basically traders. And because of the connections between Forex and crypto, it was a slam dunk. So I put some bunch of my money into the fund. You guys, came along, right? And the thought was basically for the next, 1 to 2 years, let's, get some exposure to this upside that should be happening as Bitcoin moves from this bear market that's now been, 9 to 12 months in the making. Let's get some exposure to what should be a bull market here coming soon, and start to look into what other opportunities exist in the crypto market from a venture standpoint, which is where the concept of Sutler Ventures came about. And then also from a market neutral standpoint, which would be, various algos or ARBs or whatever the case might be in the space. So that's from a Pirata standpoint, that's what we've been doing for the last 10 months now. The fund officially launched on May 1st of 2019. We saw a huge run up to 14K in Bitcoin, obviously, and things are pretty crazy right now. But that's still what we're working on. We're still, we're still around rocking and rolling, and have been able to develop some pretty awesome market neutral products that we're super excited about, and have actually on this last dump down in crypto in particular, been able to run a beta to Bitcoin of about 0.5, meaning that if Bitcoin dumps by 80%, we would have only lost 40%, right? So in this case, we lost right around half of the value that Bitcoin did if you're using Bitcoin as that index. So things are going well with Pirata there. On the venture side, we didn't want to do too much with the hedge fund from a venture standpoint, because the thesis is very different with venture. Venture takes a lot longer. Traditional venture firms will run 5, 7, 10, sometimes even, larger macro funds might run 20, 30 year, investment strategies. So that wasn't going to work under a hedge fund model, right? Hedge fund is very actively managed. Excuse me, venture doesn't really work well with that. So as we continued to follow various proof of stake companies, and because so many ICOs were moving to proof of stake, we saw this blooming proof of stake tech stack, where everybody was trying to not only solve scalability for ETH and general throughput, but they were also trying to understand what was the best way to launch a community, right? What was the best way to launch a new project? And at the time, we were pretty hot on a project called IOST, which had a very unique basically consensus mechanism and a very interesting staking setup that allowed Sutler Ventures to not only take, buy some tokens, take advantage of the potential growth that IOST would have on a longer term as that bull market hopefully, continued. And we consolidated down from 14K, but also, we could pull out value on the short term and pay ourselves and reinvest that into the IOST ecosystem. So Sutler Ventures basically acts as a hybrid venture firm, right? So there's this concept of hybrid venture in the traditional space where venture firms won't just take longer term investment on a 5, 10, 15-year timeline. They'll also do other like private equity deals and other things that allow them to pull out returns on a shorter time frame, so that they're able to kind of break out returns for their investors across a much shorter time frame than 10 or 15 years. So that has basically been our plan to date, is that we can grow the brand behind Sutler Ventures, we can grow the business behind Sutler Ventures by taking large stakes in staking projects, which are then going to reward us in the short term, so that we can pay ourselves, so that we can pay to run the server, and then also take a large chunk of that and recontribute it to the network, which should hopefully be a flag to the rest of the businesses that run like us, that hey, IOST in particular, or whatever the project is, has activity, is doing well, the network is growing, the tech is being developed, and we could theoretically grow the token price, grow the longer term, more typical venture style play really well, but also in a liquid fashion versus taking equity, which is, super illiquid. So, that's what Sutler Ventures was born under. We've got some really exciting things going on, like I said, with Sutler as well, from kind of a fixed income market neutral product standpoint as well. So we're excited there. We did announce this week that we're going to have to shut down the IOST node. The price right now makes this the business model for running the node, not feasible, right? I mean, the revenues aren't large enough to even pay for the server on a monthly basis. So unfortunately, that investment hasn't, paid off like we wanted it to, but the core concept of the business and of Sutler Ventures is still strong. And, we currently run a node for IDEX and are likely going to expand pretty aggressively here as the market settles, I think, here over the next 6 to 12 months. And token prices are at a pretty solid discount. So hopefully that's kind of a good summary of Pirata and the things that we're doing there, as well as Sutler Ventures. Obviously, we've got this podcast as well, which has been birthed out of the IOST podcast, which was a way for us to grow recognition and grow awareness for IOST in the US, where we're all based. But as we kind of learned what we were doing, and as you guys have been following along, we decided to obviously branch out from IOST and cover everything, including, how an idiot like me could stumble his way into crypto. So,
so we always get the question, right? Like when we're talking to colleagues or we're talking to other people at conferences and things, like, what's a Sutler? What explain the idea behind Sutler and how that kind of plays in, just in a brief time. I know we kind of touched on Sutler there, and I kind of want to get to your thoughts on the broader markets. I know we touched on that with Layer 1 live, but we want to get a little bit of an update there. So what's a Sutler, and then we'll move into some other things.
Yeah, for sure. So, as you know, I've always been kind of like an old soul. I love Frank Sinatra. I like my goofy hats,
Like
you
your
know,
Wall Street Journal.
like my Wall Street Journal. So, Pirata is Latin for pirate, right? Because the Pirata, we wanted to be quick moving, kind of in and out, right? Not taking a lot of longer term bets on a market that's less than 10 years old basically at that
Mhm.
time. So Sutler, on the other hand, a Sutler uh, is obviously an English word, but it is someone who at times of piracy, right? So kind of aligning the Pirata brand with Sutler, they were civilians who would set up shops at the spots where pirates would dock at, and sell things like booze and bandages and dried meats and things like this. And they would basically put themselves at high risk because they were also not pirates themselves. And a lot of these locations were kind of this like weird hybrid rule of law setup, right? There were many various islands, especially in the Caribbean, where pirates basically ran the show. So you as a shop owner, if the wrong people come through, they could kill you, they could kill your family, they could take all of your goods and plunder and leave, as pirates often did. So there was a lot of risk there on the front lines. Same in wartime, right? Those sutlers were not necessarily doctors that would go along with troops. They were civilians that they would kind of hustle and sell cigarettes and sell booze and sell news and things like this to the soldiers who were on the front lines away from their families. So we knew that by taking a stake in a brand new project like an IOST or a smaller project like an IDEX, that we were inherently taking risk by going to what I saw as the front lines of crypto to support these projects. So that's kind of the metaphor that you see there. We like to, it's not just that obviously Sutler is or Pirata is taking an investment in the project and then we don't ever communicate with the project or work with the project by any means. We are on the front lines there. We were on the front lines with IOST for well over a year or about a year, helping them grow, right? Taking that risk and IOST obviously didn't pay off, but that's where the meaning and the name for Sutler comes from.
Nice. And so going now to really, back to this market and what's going on right now, you've lived through a lot of volatility in crypto, right? You've seen all this volatility happen in the market, it's crazy, and lived through all that stuff. Why is this like different and special in a way for you? That's what's happening kind of in crypto right now. Because we've seen Bitcoin, drop quite a bit before, right? So what do you see right now in the market? How things have changed, and what do you foresee in current market conditions? How do you think that is it going to undermine the growth? Is it going to boost the growth? Where are we now? Where should we be heading?
Yeah, it's hard to concisely explain kind of how I see the market right now because there are so many different variables at play. As an example, before this crisis emerged, we saw the chaos with what everybody was memeing as World War III and the conflict that the U.S. was having with Iran. At that time, Bitcoin started to move with gold, and that was an incredibly bullish scenario, right? And now, obviously, in this crisis, Bitcoin has moved with the traditional stock market to some degree up until today, basically like a risk-on asset, right? Like as a speculative asset. So just as one example, the way that in crisis, like in 2008, the way that the US dollar and gold work together and react could potentially predict how Bitcoin works with those two variables, right? So for example, right now gold is dumping, but the US dollar is pumping, right? It's because everybody's rushing into cash. Everybody wants the US dollar. Gold is dumping because people need margin, right? They need any excess cash they can get. They'll dump anything. But in 2008, we saw the same thing, right? The dollar pumped for like 6 or 7 months and gold dumped. But then at some point, the dollar started dumping because all of that, the market had settled. All of that inflation was being realized. Things were coming back to normal and people moved into gold, right? So this is a very standard thing that appears to happen when these crises happen. This is obviously my first crisis. I wasn't old enough for 2008 to be a reality. So take this with a grain of salt, but as just these two variables alone, not taking into account the way that, the Bitcoin narrative has been sold to institutions for the first time over the last year or 2 years, or so many other things about the virus itself or general broader economy. It's even just at the start very difficult to understand how Bitcoin will move with the market, because it moved with gold for such a short period of time, and now for the first time has been correlated as a risk on asset with the equities markets. How you make a reasonable prediction that Bitcoin will do well as gold recovers, or poorly because it's been correlated with the equities market, is impossible at this point. We just haven't had enough time. So I wouldn't really classify myself as bullish or bearish at this point. I'm incredibly cautious. Personally, I've been hedged and just basically kind of looking at long tail opportunities via options and some other things. But the one thing that I am relatively certain of, I'd give it a 99+% chance, is that, like you said, this will set Bitcoin and will set crypto back for a significant amount of time. There's a lot of people talking about how all of this inflation is good for Bitcoin, right? And
Right.
how the Fed dumping trillions of dollars into the market is good for Bitcoin. And they're right. But buying Bitcoin now, like that point of them being right, does not mean that buying Bitcoin now is a good investment, right?
Yeah, timing is huge.
Timing is everything. Timing is everything in every market, right? Of recoveries and equities. If you did not participate in the top 25 days of recovery, understanding that a typical recovery in the stock market is an average of 1,000 days, right? So what is that? A little less than 3 years. So a little less than 3 years is what it takes after, say, a 2008 or 1987 or whatever it is, for the stock market to recover, to where it was previously. If you didn't participate as an investor, if you didn't own those stocks, right, whether you owned them before the crisis or you discounted, cost averaged in, if you tried to catch the bottom, whatever it is, if you didn't own equities for those top 25 days of recovery days, those top 25 biggest gainers for equities, you would lose out on 200% of gains from the bottom, right? So people that say, like, just hold, this whole hodl thing, right? Like, yes, it makes sense, but timing is everything, right? That kind of the time range that you give Bitcoin can either make it look like the worst investment ever or the best investment ever. So yes, all of this money printing is showing people how fragile our economy is, and how fragile our central bank systems are, and how fragile general markets are, industries are. All of the cons of capitalism and greed and over leverage. But that is not going to translate to Bitcoin immediately, in my opinion. The long tail chance that by June, the entire world says, hey, Bitcoin's a new digital gold. Let's buy a ton of gold. Let's back our currency, buy gold, but also let's buy Bitcoin. Like, yes, I do believe there's a greater than zero chance. There's a non-zero chance, as Pomp would say. But it is so long tail that I would never risk the assets that I'm managing on that long tail chance, nor would I encourage anyone else to. So, like you said, timing is super key, and kind of where I stand on markets today is one of needing more information. We don't even have a full post-mortem on what happened on BitMEX on the night of the 12th. I really need more information before I'm willing to kind of make a bet one way or another.
I think a lot of traders and investors on the sidelines as well right now, just taking a breather for the market to kind of stabilize. So I think that's definitely a normal thing to do at the moment.
Yeah, I want to get your opinion on one thing, because you talked about Bitcoin there and how it kind of obviously is getting set back in this crisis, however many years that you think it is. But I feel like there's a whole nother conversation to be talking about these altcoins, right? Not just the
Right.
major cryptocurrency that is Bitcoin, that is Ethereum. From a venture standpoint, when can we see these altcoins actually act fundamentally, when it's all correlated to Bitcoin, and then
Right.
Bitcoin being subject to what's happened in this crisis with a 50% drop, it really doesn't matter what you're investing in at that point. That's my view. So what's your take on this? Not just Bitcoin itself, but all of the corresponding altcoins that follow in its wake.
Yeah. So two things, right? And so basically what you're asking, right, is when can we expect altcoins to outperform Bitcoin again, based on, an understanding that when, Bitcoin moves within what we could clearly consider a bear market for crypto, altcoins are correlated to Bitcoin, right? So the first point I'll make is that data suggests from people who have looked into this that from an investment standpoint, right? And the thing that I'm thinking of off the top of my head here is a quote from Willy Woo, who is a famous kind of researcher in the space, and I'm not sure if he's a trader or not, but there's something that really stuck out with me when looking at some of the data that he presented on kind of holding crypto through various cycles, various bull and bear market cycles. And what he said was that the data suggests that Bitcoin is a much better store of value than these altcoins. And that over time, what we've seen from cycle to cycle to cycle is that when an altcoin falls by X percent or greater, right? So let's say like 30% or 40% or 50%, I don't remember what percentage you gave, but it was something like that. The chances that altcoin is able to recover are so much less than what Bitcoin has shown, that your investment strategy should be that Bitcoin acts as more of that safe haven cryptocurrency, right? And again, just thinking within crypto, right? Bitcoin is the more safe haven currency, whereas altcoins are more like the penny stocks, right? Because the chances that a Decentraland or whatever, like whether it's in the top 100 by market cap or outside of the top 100, the chances that those recover and let's say to this time frame return to the prices that we saw when they pumped here recently, or even return to the prices we saw when Bitcoin pumped 20K, are so low that your strategy should always be to dump altcoins at a loss if they continue further down, right? So, as we saw after the dump when BTC went from 20K to 3,200 or whatever, altcoins lost 99% of their value, right? It is highly, highly unlikely that those will ever return to even break even if you bought them towards the top. So from just like a investment context, that's the way that I look at it. So unfortunately, if you're holding an altcoin right now that is 60 or 70 or 80 or 90% down, because just like we see with stocks, there's so much being pulled out of it for, say, margin on BTC trades. There's so much people exiting, running for the hills. It's highly unlikely that you will ever make your money back. It's much more likely that you will actually continue to lose money, as assuming crypto continues into this bear market. That is just what the data suggests, right?
It's not going to go to zero, right?
Right. What was your quote the other day about Chainlink? Didn't Chainlink hit zero?
Yeah,
Bounce
I know.
back up, but
yeah, there you go. See,
whether or not Chainlink will ever hit $7 again, the data suggests it will not.
Mm-hmm.
Is my point, right? It may, but from a probabilistic standpoint, the chances are very low. So that's kind of the first piece, right? And the other thing to worry about if you're primarily an altcoin holder, investor, or enthusiast, right?
Bag holder.
If you're a bag holder at this point, is how quickly tech in crypto evolves, right? So even within the last year, you can see projects, seeing huge moves up, right? Like Cosmos, you see this huge move up. Cosmos is coming. Cosmos is going to, be the largest interoperability product. It's going to do all these things, right? And then the team basically falls apart because, Zaki is going through whatever, right? And loses, the height on that was what, $7, and now is probably under, what's it at, like under $2 or under $3. It's getting absolutely crushed. So just in a year time frame, Cosmos goes from like, hey, the next biggest thing, to just what I would say is another project in the space. So if we assume that this crisis is going to continue for, let's say that the stock market recession continues for 3 more years, right? The average here. Let's assume crypto does way better and has some monumental moment, and only has kind of a recessionary moment for half that time, right? So for a year and a half, so for 18 months. Well, so many companies they have the funding to be able to keep building and to continue to move it, to continue to move technology further, right? If within this 18 months, Cosmos falls by another 50%, right? And now to get back to break even at $7, let's say that does take 3 years, right? 3 years before it gets back to $7. How much within the interoperability tech stack can happen in 3 years' time to basically make Cosmos null and void, right? To basically make it a project that does not currently at that time have the best tech. And that's the other worry, right? Is not only has the price been crushed by so much, and if you kind of forecast your thoughts on the traditional economy to then the crypto economy, and then build in the price of these altcoins, it's really hard to understand how new developments in this bleeding edge technology are not going to come out and be the next big thing, be the next ETH, be the next EOS, be the next Tezos, be the next Chainlink, whatever it is.
Yeah, you have to have some funding to be able to attract developers, because you have to have developers within your own ranks that are really making headway. Or like what you said, you're going to have some competitors come up, and even a competitor will come up, but at least you'll be funding developers on your own network and trying to push things forward. So yeah, that's a great thesis there. So this was a good episode, man. I think we went an hour and a half, something like that. So we're coming up to the end of it, man. We got a book question probably to finish off. Dima, did you have anything else for Mike before we hit this book question?
No, let's hit it. It was definitely a great interview.
All right, man. Book. Throw something at me. Don't throw me. Throw something at me.
Yeah. So I think it might be Pomp's podcast. He does the same thing, right? He asked for book recommendations. And one of the most recent ones I was listening to had a good way to kind of explain this question. And that person basically said, like, the reason people say what their favorite book is not necessarily how good the book is, but how it's affected them, right? And what they needed to hear at that time. Might have been that Raul guy from, anyway. So I'll give you two from just like a business / entrepreneur / understanding of the world standpoint. The most important book for me was Catch Me If You Can. It's the book behind the famous movie with Leonardo DiCaprio and Tom Hanks about Frank Abagnale, who was a check forger back in, when was it, 60s or 70s, something like that. And he was basically a kid who ran away from home after his parents got divorced and didn't know what was going on, didn't know anything about the world, but basically discovered that he could forge checks, and the banks would cash the checks and give him the money before the bank wires or the banks would settle the checks from wherever he got the check from. So at the time, basically he was like arbitraging time between banks settling checks. So he would cash it at one bank, take the cash, piece out of that city, and by the time the bank across the country knew that was telling this bank where he cashed the money at that, hey, no, this check bounced, this person isn't real, don't give the cash, he was already gone. So he did this for a very long time. And if you like the movie, definitely read the book. It's a fantastic book that actually goes more into depth about some of the like various schemes that he did as a kid too. There's one where he was buying tires from a gas station because there was a discount, and then reselling those tires to other people and using like his dad's using his dad's credit card to run this scheme. And he made like thousands of dollars. So what that book told me at the time when I was reading it in high school was that while there is this structured system and this structured society and rules to, let's say, the way, the things that you should do, right? You should go to college, you should get a job, you should save to your 401k, you should get married, you should have kids, right? A lot of the things I've done, that those rules can be broken and manipulated, and don't necessarily have to be followed 100% of the time. Obviously, don't go out forging checks, but that was something that, like,
damn it,
in high school, I was like, oh wow, like, this is just such a different way to look at society and look at like the societal structures that are in place, that then when I came upon things like entrepreneurship with the beer company or things like crypto from a technological standpoint, it was a lot easier for me to conceptualize them and understand how they exist outside of typical social or financial or whatever structures. And that while they involve risk, if they work out, there's a lot of reward there. So that was a big one. And the other one, as I started investing in crypto, I had no previous experience investing or trading anything else, right? So I had I was working from a zero basis point, basically. I had no knowledge. Everything I knew about crypto was learned and invested on from a relative fundamental standpoint. So I read The Intelligent Investor by Paul Graham?
Benjamin
Graham. Yeah, The Intelligent Investor, which Benjamin Graham was the mentor of Warren Buffett. And before Buffett, the most famous fundamental stock investor, or basically long-term stock investor who instead of kind of playing the cycles and getting hyped up in PE ratios and all the other things that other investors have been plagued by, his strategy was solely fundamental. And that's kind of like, in a lot of cases, the first steps that any traditional, financial investor will take is, you learn about the fundamentals first. And that was a really good way for me to kind of understand how people look at equities markets, and gave me a little more structure when I started to look at crypto markets. So if you're kind of, if you're in your 20 somethings or even 30 somethings, 40 somethings, it doesn't matter, right? And you don't have any background on investing, that's a great place to start and a great foundation to build there. So
first you forge the checks, you make the money there, and then you invest that in the stock market.
Exactly, man. And there's not there's definitely a metaphor between the general luck that I had with ETH and even EOS to something like a forging checks, right? Mm-hmm. Mm-hmm. Entrepreneurship, investing, right? There's this risk reward, but there is obviously a ton of hard work needed, but there's a lot of luck that comes into place too. And those, you can't really go out and find those opportunities. You just kind of have to put yourself in the right place. You got to, love what you're doing. And when those opportunities come about, you've got to rush into them. So, don't go forge checks. It's relatively impossible now anyway. Don't go steal anybody's identity. But whatever that legal side hustle is, whatever that legal opportunity is that you see, work hard for it, run with it, because it might end up turning out to be that break that you need to do whatever it is you want to do,
As I've, worked with you for a little while here, one of the things I would say that you're best at and that I appreciate the most is at ICOAlert, Sutler Ventures, everything. Not only your ability to kind of like see where you want to go and then get there. I think the Finches all have that ability, but you kind of in general take care of the people around you. And that's like a really cool trait that I think if you mix that with the ability to know where you're going, you're going to have success. And you've obviously had a ton of success, but I just wanted to, say that for all the viewers out there that have stayed till the end. So just let them know where they can find you on Twitter. And that's about it.
Yeah, no, definitely, man. I appreciate it. I hope everybody out there enjoyed this. This is something that we kind of thought of. Like we said at the beginning of the episode, Dimitri's going to be next. He has just as interesting of stories with his time Wall Street, and obviously his Ukrainian heritage and a lot of the history there. So some good interviews to come with Dimitri and then Q here. But I'm on Twitter. I completely despise Twitter, but have jumped back on here over the last few months, and I'm glad I am, because now it's just an absolute war zone and crazy, and I love to see it. Yeah, well, welcome back. It started, I feel like I jumped in, and then it was the Iran stuff, and then now it's this. So, but anyway, my handle on that and pretty much everything is that Finch guy. So if you want to follow me on Twitter, go for it there. I also tweet from the Sutler Ventures Twitter. It's just at Sutler Ventures. So if you want to keep up to date on Sutler Ventures as well, that's where you can. I've been tweeting a lot recently, just kind of as a way to just throw my thoughts out there on the crypto markets. They're ever changing right now. It's super chaotic. So if you want kind of a glimpse into that, give me a follow.
Awesome. All right. Before we end the interview, answer it in one quick sentence. Who is your favorite guest that we've had on Layer One?
Probably, this is hard. We've had so many good guests, but I would say probably Brian Kerr from Kava.
From Kava.
That was a great one. There's others that I'm forgetting. There's a bunch of good ones, but that was one. Like, he's a guy who's been in this for a long time. I feel like he has very similar perspectives to us, and it was just a general great interview about some of the stuff they're doing over there. So yeah, check that one out. Other than that, right. Layer One Live. I love Layer One Live.
Yeah, those are fun times, man. Mondays, I always look forward to those on Mondays. But that is a wrap on this episode. Mike, thank you so much for being a guest on Layer One. Hopefully you had a good time.
Yeah, hopefully, if we do this again a few months or a year down the road or whatever, it's much happier times. But coming up next will be Dimitri in this series, which we might be doing a lot here.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer One on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.